and with optimism. Okay, so it's very important to amplify that message. And that is why your presence here today matters so much. As business leaders, your insights, your ideas, your perspectives are critical in ensuring that these reforms take root and deliver on the outcomes that have been promised. Everybody has a part to play in this regard. So at PwC, our objective is clear. We want to remove complexity from tax. We want to help our clients to anticipate risk and deliver solutions that are practical and tailored to their businesses so that you as business leaders can focus on what you do best, which is making an impact and grow your business. So as we begin today's session, I have 3 asks or 3 suggestions. The first is, in the room, tax experts and perhaps the architects of these reforms. Taiwo is going to be here very shortly. Please, I urge you to think boldly, to challenge assumptions, to ask the tough, hard questions. There is nothing you're going to throw at Taiwo that he cannot handle. He has handled worse. He has discussed the show for it. Secondly, we often think about tax as an obligation. Right? I want you to begin to think about, to change the paradigm from obligation to opportunity. What opportunities are there for you, for your businesses, for you individually, as we begin to implement these tax reforms? What do you see as the potential benefits? What strategies do you begin to think to deploy to enable you to take advantage of whatever changes are coming around down the pike? Whether it is around technology, your systems, your workforce, there are so many opportunities that this provides. So don't think about obligation, think about opportunity. And thirdly, there are many business leaders in the room today. I urge you to connect. Business leaders here are invested in the idea of building a strong and resilient Nigerian economy. Please connect, please share and engage. So let me end by welcoming you again and thanking you for joining us, and I look forward to the conversations ahead.
Thank you very much for that, Sam. I think from that welcome address, what is clear is that our desire is that the connections and the drive tax strategies that are optimal, but also drive business success. Now, to give us a flavor of what to expect for the rest of the morning, please welcome on stage our tax and regulatory service leader, Chijuk Webute, to say a few words.
Good morning, everyone. You know, how do I say anything after Sam has just put it all together? I'm just wondering what to add to it. But I'd say, first of all, thank you for showing up. I think it's really critical that we all come together to have these conversations. You know, thank you to our speakers. Having the executive chairman of two very significant revenue services in Nigeria will tell you that this is a conversation that we will have here with the people that are actually going to implement this law. And also having Taiwo here is an opportunity to have a conversation, ask the hard questions, and also, start looking at practical ways to implement the reforms. How do we navigate them? So today is all about being practical. Today is all about having the right conversations, asking the right questions, and ensuring that there is some level of clarity on how we're looking to navigate these new tax reforms we have. So I'll say this, right? Engage, ask the questions, and one thing is for sure, this is the start of many conversations. We will continue having these conversations at least until January 1 to get the clarity of how this needs to be implemented and what it means for our individual businesses. So thank you and enjoy yourselves. I'll hand back to Tiwa.
Thanks, Chijuk. Now, to take us further, we would need to go into a deep dive session into the reason why we're all here today, and that is the tax reform bills that have been signed into law. And to do that, please welcome on stage my colleague, tax partner, Shenwadu, who will do a deep dive and give us an in-depth understanding of the changes.
Good morning, everyone. So I have the challenging task of taking you through 400 pages of legislation in 10 minutes. So I might as well get to it. So we know this already. The bills were signed into law last month. All things being equal, they become effective from 1st January 2026. And in terms of the overarching objectives and what we've seen the bills do, we see that the various tax legislation that we had have been consolidated into about 4. There was a drive to harmonize tax administration across, facilitate the ease of doing business through tax processes, and also digitize tax processes. And when we look at the different acts, they answer a number of questions. What taxes do we collect as a country? Who should collect those taxes? How do we collect those taxes? And they also look to initiatives around what taxpayers can do to get their rights enforced. In the work we've done for many clients, and I mean, Taiwo had mentioned that we would do a deep dive. There's no way we can do a deep dive here, really, to be frank. But I'm just going to touch on some of the micro-level impacts we've seen in the work we've done for some of our clients around these bills. Taiwo will have a lot to say about the macro impacts and things like that. But what's coming out very clearly for us is the tax reforms affect every part of your business, starting from how you think about your group and legal entity structure, investment decisions, divestment decisions, etc. Even your business value chain as well, and the people, processes, and technology that support your operating model. So if we look at group and legal entity structure, one of the overarching things I see when I look at a lot of the provisions that touch on this is there's a drive to incorporate modern rules that look to prevent incidents of tax avoidance. So essentially, our tax rules are leveling up to ensure that some of the learnings from other countries where they've managed to block loopholes are being incorporated into our rules. And one of the ones that stand out for me, which to be honest, I don't think gets talked about enough, is the definition of residence and the changes to that. We have a situation where by 1st January 2026, possibly, you could have a foreign incorporated entity that could be fully taxed in Nigeria on its entire profits if that entity is being controlled meaning where does the board sit and things like that, or it's being effectively managed in Nigeria, being where the people that make day-to-day decisions sit. And that's potentially a big one. So we have people that suddenly realize, oh, that my SPV in Mauritius might actually be a Nigerian residence company by 1st January 2026. Similarly, we have rules around indirect transfers as well. And you could have a situation where you dispose, or there's a disposal of the shares of a foreign entity that owns a Nigerian company. And if that disposal means that there's a change in the ownership of the Nigerian company, that disposal then is seen as a taxable event in Nigeria, not minding the fact that the shares that were disposed are not of the Nigerian company. So all of these rules that we see here are really to reflect some of the advances we've seen in other countries, minimize opportunities for avoidance, and ensure that Nigeria is able to tax its fair share of taxes. And I think the point here is when you're thinking of business restructurings going forward, investment decisions, divestment decisions, you have to think of them differently because the implications and consequences are a lot more different going forward. Again, when you look at your business value chain as well, there are a lot of touch points for the new tax reforms. One of the big ones that is a big positive for businesses is the fact that going forward, you can recover any input VAT you pay on fixed assets and services. And for some businesses, that could near about 30% of their cost on an annual basis. So it means you have the opportunity to recover this cost and by that way improve your cash flow. There are also a number of changes around the incentives for certain business sectors. So your pioneer incentive has been replaced with an economic development incentive. And the way you look at the taxation of free zone entities has changed as well, because there's a drive to ensure that you get tax incentives in the free zone if you're predominantly exporting the goods that you've produced. So again, these are just high-level points. And what we find is across the entire business value chain, there are a number of touch points that people need to start thinking about and thinking of very differently. Same with people, processes, technology. There are changes that will require you to rethink the technology that supports your processes. There are changes that require you to rethink your processes as well, because there could be significant implications if you're not thinking about those things and doing those things right. My colleagues will discuss the issues around e-invoicing further down the line. But what we see overall is it's necessary to have a careful rethink, looking through your business operating model and value chain to appreciate the different touch points of the tax reforms to ensure that at the minimum, come 1st January 26, you're ready and able to comply and you're not getting any surprises. And where you can do one better to actually leverage some of the efficiencies and advantages that may be there in the legislation, you can explore that as well. So in terms of what we're seeing people do and what we're asking them to do, it's important to work with experts, get a very good appreciation of how the changes impact you. And those conversations are not conversations between the tax team and your consultants or anybody else. There are conversations that need to happen across the business, because what we've seen is there are touch points across the business, right from your input processes, your production processes, to your sales processes. There are different changes that could impact the financials around each of those processes. So we say, understand the changes, do a value chain analysis impact to understand how it impacts your business, develop strategies that can help you respond to those changes, ensure you're able to implement those strategies, and going forward, you then need to monitor those changes to ensure that they continue to deliver on the returns that you expect from those changes. So in summary, I'll close with the point that the tax reforms elevate tax conversations to the boardroom. So it's no longer a conversation that you leave with the tax manager because of the level of buy-in you require across the business at senior levels. It's important that conversations around the impact of these reforms and how the business will respond, it's important that those conversations start to happen at the board level. Thank you.
So thank you, Sean. And I think he did a pretty creditable job of trying to go through 400 pages of legislation in the time allocated for him. And for me, I think the last part of, we talk about business structuring, we talk about, the value chain and the models and the rest. But that part that also talks about our people and how we're going to upskill our people. In fact, one thing I always tell my colleagues is that this is an opportunity for you to suddenly become an expert in this tax law because they've leveled the playing field. They've brought the taxes together. It's now an opportunity for you to actually learn and unlearn some of the things you know. I mean, I've been doing tax for 26 years, and I know that there's a lot I'm going to have to unlearn and, just reframe how I think. But I think in terms of being able to upskill your staff, get management to think differently. In fact, one of the things we've had some of our clients do is almost like tax town halls, because tax has become a critical part of the business. So what we've asked clients to do is bring everyone together, legal, commercial, the procurement teams, the HR teams, bring them together in the room and tell them what these tax reforms means for them. Also for management, we have C-suites people here, and management needs to start understanding the implications of the changes in the tax laws. So I think for us, it's extremely critical that we start looking at these things slightly differently. Another point I'd like to also bring in is that, for taking it a notch down in terms of how technology will also kind of drive how tax is done going forward. The tax authorities are upskilling. We've talked about e-invoicing. There's a huge drive for data for tax. Mr. Zubair and Mr. Ango here are probably smiling because of the amount of information that they will become privy to, going forward. And I can see Mr. Zubair smiling. So really, data for tax, technology, and the fact that you're going to have a lot of interface, there'll be access to information. You suddenly find out that while it makes life a lot easier for you, I think the tax audits are going to become a lot easier because with technology and data, it's very easy to now have the right interactions with the tax authorities. But it's also critical that you also as a business start asking yourself the questions around, how robust is my technology? What are the kind of processes that we've had in the past that we need to change that will now optimize our engagement with the tax authorities, optimize our ability to file returns. Some of you now have monthly returns filing obligations, right, which has changed. Some of you need to start looking at the changes, the tweaks that have been made. In fact, I have some clients that have not even implemented the withholding tax regulations that came through January this year in terms of change of rates that they need to kind of do. So I'd say for this, right, that for us as PwC, what we are looking to do here is really to drive some level of change in the mindset of our clients and even our people as well. Now, next on the agenda for us is actually meant to be a presentation by Taiwo. And I'm going to hand to Taiwo to kind of give us a sense of when that would happen and what else we need to do to take it forward. Thank you.
Thank you, Chijuk. Thank you very much for that speech. Taiwo will be here very shortly, but before we go into his, okay, I understand he's here. I think what's absolutely critical for us is to hear from the people who have actually shaped the policies that we're going to talk about, and none other than the chairman of the Fiscal Policy, of the Presidential Committee of the Fiscal Policy and Tax Reforms, Taiwo Oyedele, to the stage. Straight on stage. Yes. Morning, Taiwo. How are you?
Good morning. I'm getting my own version of the slides. All right. Good morning, everyone, and thank you to PwC for inviting me. Apologies, I'm trying to multitask. There is a very important engagement in Abuja that was set up by the Ministry of Industry, Trade and Investment. We're supposed to have this last week. We were all set, and then our late president passed, and the calendar changed. So they moved it to today, and I had to be in Lagos, had to join online. So apologies. So now we're here. The time I have is very short, and what I need to tell you is a lot. So I'll get straight on to the agenda. 4 items. One is the context. The second one is the counterfactual. The third one is the key changes. And 4, the benefits, that's the tailwind. It's like the proverbial blind man and the elephant. The part of the elephant that you touch is your impression of the object. That's exactly how the tax reforms are. It's significant. It's the most consequential, I would say, since our independence. So it's a lot. And one thing I'll leave you with today would be to not look at one part of the elephant. You will make the wrong conclusion if you look at only one part. So, did we need the reform? I don't think there's anyone in this room that will debate that. If the global tax system were to be like cars, which you can use for a race, this is what the picture would look like. That's their country there with the 1960 VW. It doesn't matter how hard you pray. It doesn't matter how good a driver you are. This is a race you cannot win. You can't even compete, let alone win. Even within Africa, the likes of South Africa, Rwanda Revenue Service, they've gone so far ahead of us. And we're Nigeria. We have what it takes. We have the human capacity, we have the knowledge, we have the skills. We're missing the political will until we found it. It didn't mean it was easy, but just it became possible. And see the rest of the world with their cyber truck. So what we've done now is in between the Pojo in the center and the cyber truck. We're no longer where we used to be. And that's the key message here. We're no longer where we used to be. The reforms have been painful, but they're beginning to yield positive micro results. You know, many times when you hear analysts speak, including economists, accountants, of course, politicians, everybody's all over the place. Is your life better now than it was before? See, that's a wrong question to ask. You know why it's the wrong question to ask? I'll tell you about it. And you see, I'm not even here to convince or confuse anyone whether the government is doing well or not. No. That would be condescending for this elite audience. You can make your own judgments. I'm here to only share the facts with you so you can make your own decisions. So what I thought I should provide context with is where we were pre-May 2023, just focusing on the fiscal aspect and a bit of the economy, and where we are today with the reforms, especially from the macro side of things, and where Nigeria could have been today if we did not do those reforms. That's the counterfactual. That's what you should compare. And it's a lot, but I think you have this material and you can go through. If there's anyone you want to dispute, feel free to. I like debates. You see, as of May 2023, we had big problems with the exchange management, exchange rate management. We were owing more than $7 billion in unmet forward contracts. Some businesses stopped doing business with us, like airlines, Emirates. I think we were like the top in the world for owing airlines money to repatriate. We had very wide margin between the official market rates and the parallel market rate. And of course, the official market had multiple windows. We had about 97% of federal government revenue going into debt service, not paying them back. And our tax to GDP ratio was under 10%. We had used all of our revenues to subsidize PMS. It was not enough. We started to use future production. We have not produced them, but they are on the ground. We committed them to subsidize PMS. It still wasn't enough. NMPC took the taxes they were supposed to pay, and they used that as well. It was not enough. They started taking the taxes of the other operators in the industry to also pay for the PMS. It still wasn't enough. If we had continued till this day, the subsidy regime would have collapsed naturally. You would hold 10,000 naira, you will not find a liter of PMS to buy. And I say that with all sense of responsibility, because we are running out of fiscal space to deal with the subsidy. Many people will argue, including myself, that there was a lot of corruption in it. That's true. Could we have removed the corruption in the time frame? No, if you want to be realistic. We had huge budget deficit. We printed over 30 trillion naira to spend. We're not building roads. It wasn't that we're building electricity. We were paying salaries. The ways and means was very expensive. Accumulated interest amounted to over 7 trillion naira. You won't be surprised if inflation is high, because you can't print money without commensurate productivity and expect things to remain the same. It goes against all known laws and theories of economics. Interest rates was high, inflation was rising, poverty was unbelievably high, decent jobs were not available. We're not managing public financial management well. Policy coordination was to be dreamt about, not to be expected in reality. And interest rate was high. That was pre-May 2023. Now, today, being factual, from negative trade balance and balance of payment, it is now positive. Not just positive, the numbers are significant. Official exchange rate is unified, and the margin between the official and parallel rate has been collapsed. We've cleared FS forward of more than $7 billion, and we've moved from under $4 billion unencumbered net external reserve to over $20 billion today. Budget deficit is declining, and we're spending more on infrastructure. Tax to GDP ratio moved from under 10%, is now 13.5% in 2 years. Instead of 97% to service debt, is now under 50% in 2 years. We no longer print money to spend. Rather, we've paid down part of the ways and means that the previous administration printed. Crude oil production is rising, and gas. The number of rig counts from under 10 is over 40. They're not coming to do tourism. They want to do business. We have market-friendly policies overall than we used to have 2-3 years ago. I'm not saying the problems have been solved. No. I'll be deceiving myself and therefore deceiving everybody else. But we're seeing the macros moving in the right direction. And you need the macros to accomplish the micros, right? It's like planting a tree for which you expect fruits. The roots have to go down so that the fruits can come up. What we're seeing now is the roots going down. And I agree, we need to accelerate how you transform or translate the macro results into micro outcomes so that when the ordinary person goes to the market, they can feel the impact. In terms of their purchasing power, they can meet their basic needs. If we didn't do these reforms, this is an idea of how the picture will. You see, this slide is colorful. It's colorful intentionally. You know, this pre-May was amber, very close to red. See where we are in the middle, a lot of it has turned to green, but it's not all green yet. Like interest rate is still high, right? We don't have decent jobs. Governments can be more coordinated and communicate better. And the interest rate environment is not very conducive for legitimate businesses. Every time I sit down, I wonder, what legitimate business can anybody do? Borrow at 35% and break even. There are not many of them. Nigeria today, without the reforms, would have looked like that. Bigger deficits, more naira printed. We will have easily over $10 billion on METs forwards. Tax to GDP ratio will be less than 10%. We'll be spending over 100% of our revenue to service debts. You hold money, you will not find PMS to buy. There'll be more poverty, and we'll have more ways and means. I thought to bring a currency and show you. So this currency, these banknotes, in my hand, is 100, let me hold it properly. This is 100 trillion Zimbabwe dollars. Well, I'm not saying 100 billion, no, 100 trillion, one note. This note, at the time I got it, was barely enough to buy a loaf of bread. I gave my friend that I got this from $10 US, and he's still grateful till tomorrow. I'm keeping it as a souvenir. This is what would have happened to Nigeria. It was the road to Venezuela and Zimbabwe. So that is what we really need to compare. If some of these reforms that were done in the past 2 years had been done 10 years ago, I tell you authoritatively, today Nigeria will be a $1 trillion economy, guaranteed. And the price of PMS will be under 300 because the exchange rate will be under 300 naira to the USD. We've done this analysis. Over the past 10 years, comparable balance of payment between Nigeria, Kenya, and South Africa, yet naira has lost 6.5 times more value than Kenya shillings and South African rand. If only we had maintained the same level of stability as those two other countries, Nigeria will be a $1 trillion economy. What that means is the size of middle class will probably be 10 times what it is. Every single investor in the world will take us seriously. Enough about that. So how are we reforming? Now that we agree we need to reform. Bear in mind, although many people, including people in government, get this wrong every single time, they thought we were doing the tax reform so we can generate more revenue. No. We like more revenue, but if you start by thinking about generating more revenue, you're placing the cart before the horse. Revenues, particularly from taxes, don't fall from heaven. They're not a consequence of your nice policies or good tax administration and enforcement. No. They're the consequences of economic activities. Should you want more tax revenue, stimulate economic activities, and tax revenue will come as a natural consequence. That's exactly the approach we have adopted. The reforms are people-centric, they are growth-focused, and they're efficiency-driven. You can take those three to the bank. So what have we done? We've done quite a lot, but I needed to fit this into one slide because PwC gave me only 20 minutes. So you can blame PwC. Some of the important reforms include the withholding tax because the cost of working capital is unbearable. So we thought, why should the government keep your hard-earned money, cash, that you borrowed maybe at 35%, when the tax is not even due until like maybe 18 months' time? Let's allow you use your cash to create more business so you have more profit and you can pay more taxes. In fact, hire more people who pay more personal income tax, they consume and pay more VAT, and then the system works. Higher exemption threshold for small businesses. We have been told this story for so long. It turns out that story is not valid. It is that our money is in the informal sector, and if only we can figure it out, we'll be a rich country. It turns out there's not a single country in the world that has become rich by taxing poverty. What we see around the world is, in most countries, particularly where you have high level of inequality like Nigeria, you find the top 1% paying more than the bottom 99%. That top 1% is not the informal sector. That is not to say that some informal sector are not in the 1%. There are. Some of them are there, but very few. From our analysis, it is only the top 3% of the informal sector that has the ability to pay. Therefore, in these our reforms, we have legally exempted the bottom 97% from paying taxes. Let them breathe. When they grow, they'll have the capacity to pay. And many people would ask me, are you sure that all the companies in Nigeria will not become small? They just say, we are small, we are small. We say, yeah, that's fine. This will happen anywhere in the world. If you create an exemption threshold, people want to force themselves to be under the threshold, isn't it? Because they don't want to pay tax. It's hard to pay tax anywhere in the world. Nigerians are not bad people. They're not worse than people who live in other countries where things work. The difference is the system. So the system we are building is that if you like, go and lie and say your business is small when it is not. We will find out, and there shall be consequences for those under declaration and tax evasion. Our tax system is now progressive. We can say that and close our eyes, and we'll be right. Intentionally, we have made it progressive for all the major taxes. When people talk about progressivity, they focus on personal income tax. We thought we could take it beyond that. Personal income tax should be progressive. Don't tax poverty, reduce the tax on middle class, and get the rich people, unfortunately many of them are in this room, I apologize, to pay a little bit more. And I'll even tell you that even for the rich people, this reform overall, remember the proverbial elephants? If you take this reform holistically, every single person benefits, including the high net worth individuals. You know how that is the case? It is because we ask the rich people to pay a little bit more in personal income tax. From top marginal rate of 19%, it could get to 25% if you earn like 10 billion naira a year. You know, that's a lot of money. Some people say we no longer have middle class. What is this guy talking about? Have you heard that before? They said there's no middle class in Nigeria. That's a fallacy. Every country has a middle class. You are our own middle class. What does it mean? If you have the capacity to meet your basic needs and you have something left, you are middle class. And when we did the maths, it's about 2 million naira per month salary is the threshold for middle class. Between that, once you earn more than that, you're already exceeding our middle class. And since we are the people we can find as rich people in our territory, you should pay a little bit more. By the way, you know these rich people we are talking about, they are either the owners of businesses or they are executives. If you own a business, what we've done is reduce the tax burden on your business. So your profit will go up. So it will still come to you. So you're making profit of like 10 million, we ask you to give 2 million. Why are you complaining? Net of 8 million, you're better off. If you're an executive, because the profit will go up, you can make your bonus go up as well. So that when you pay the extra tax, you are still okay. We've eliminated taxes on investment and capital. We've rationalized incentives that are not only wasteful, but they are distortionary to the economy. And we've harmonized, pay attention to this, we have harmonized federation taxes and levies. We are harmonizing federally collected taxes. We are yet to harmonize sub-national taxes. Because I know people are very excited about harmonization, but we have to be realistic. The ones that are within our control, that we can do with the law, we have done. Some of it require that we amend the Constitution, and that journey has started, but is not yet complete. We are working on a national fiscal policy framework. It's about 95% done. Hopefully in the coming weeks, months, it will be signed. And because people say to me, when you collect all these taxes, these are politicians who waste the money. What's the point of collecting the tax? We say yes, but we can't solve the problem by two wrongs don't make it right. We still need to pay taxes. How about we make sure that they use it for our purposes? So we're developing a spending framework, revenue framework, borrowing framework. What should be Nigeria's policy around subsidies? What should we subsidize, and how should we subsidize? How do we ensure inclusion, women, people with disability, and the youth? You have to build a society that works for everyone. Otherwise, you're sitting on a gunpowder, it will explode. It's a matter of time. We're reviewing tariffs. On the average, tariffs on raw materials and intermediate products in Nigeria is twice as the average for sub-Saharan Africa. Doesn't make sense. You want to produce, but the tariff on input is more than the final product. We've seen that example many times. So we are reviewing that to redesign the tariff to work for us. And for those who may be interested, there's excise on harmful products, tobacco, alcohol, sugar-sweetened beverages. We're developing a policy as to how do we tax those products in a way that balances all the important considerations. We're promoting business formalization. Before these new tax laws, if you operated as Taiwo enterprises and you're honest in paying your taxes, maximum income tax you pay, less than 20% of your profit. If you incorporate by mistake as Taiwo Limited, that tax burden jumps to over 40%. So it's not rational for any rational human being to formalize in Nigeria unless they are compelled into doing so by other factors. What we've done now is to try and turn that on its head. So it's going to be economically beneficial for you to formalize than not to formalize. So it's an incentive scheme that makes you formalize your businesses. We're using fiscalization and electronic invoicing to catch people who lie about their affairs. The things we are yet to do, I've mentioned a number of them. We're working on a robust presumptive tax regime. And guess what? This is not just for the informal sector, it's for what we call hard-to-tax persons. If you're a high net worth individual and you refuse to tell us your income, we will find out and do presumptive tax regime for you so you can pay. We address other structural and fiscal constraints. We want to reduce corporate tax rate from 30% to 25%. The governor said we shouldn't. We had to respect them, but we had to convince the lawmakers to put the language in the law and give the power as to when that takes effect to Mr. President in consultation with NEC. That's the National Economic Council. We succeeded, and that's good news for me. So we've written to NEC and Governors Forum to say, we please want to come and talk to them because we need to go and appeal to them and convince them. Our plan is once we can convince our governors, we will write the executive order. Mr. President is already on board. We don't need to convince him. For Mr. President to sign this order so it can also take effect from January at the same time as the new laws take effect. So you can actually see a significant drop in your tax burden. We're working on budget and spending reforms. You can see the lawmakers are going around the country. We've submitted about 10 amendments to the Constitution to amend different things to do with fiscal areas of our lives. We're working on a voluntary disclosure program so that if you know that you have not been very compliant, you can come forward and fix it yourself before we come to you. because when we come to you, it may not be very interesting. The laws have been signed 26 June 2025. Implementation will commence from January 2026. There are some misconceptions, misunderstanding, and maybe some contentious issues about the reform. So I'll try and go through them very quickly now and just stop, because if you allow me, I'll speak for 2 hours without knowing it. There's the personal income tax. And some people said, oh, you've taken away our allowances and our reliefs, you're taxing more people. We said, no, we're not taxing more people. The fundamental principle is, what is the effective tax rate that you pay? It's not whether there are allowances and reliefs. So that's how we started. And we wanted to accomplish 2 objectives. One of it is keep it so simple that an average person can file their returns without looking for a consultant. Sorry, PwC. So why do you need personal relief 20%, consolidated relief this one allowances? You need to figure out all those things, right? And whatever is left, you now apply the tax table to it. If I give you 1 million naira, and I say don't pay tax on 20% of it, and pay 20% on the balance, you pay 1.6. Sorry, you pay 160. What if I just say to you, I give you 1 million and you pay only 10%? Isn't that less than 160? They are not released, but they are better off. That's exactly what we have done. If anyone earns, they are not in this room. If you earn between 120,000 naira or less in a month, they were not invited by PwC. If you are paying no tax, you will not pay any tax going forward. Your tax is 0. If you earn between 2 million and 120,000 and 2 million per month, your tax rates, your tax burden will come down. If you earn more than 2 million per month, it will go up slightly. Like if you earn 5 million per month, you may see that it goes up by 500 naira a month. So even though we're saying it's going up, it's so marginal. You begin to see the amount when you earn like 100 million a year, and you can say that's not a lot of money if you convert to dollars. But like I said, you are the rich people we can find in our territory, and therefore, you are the one to give us a little bit more to balance the book. The book is not balanced, but we're able to close the gap. So that's the personal income tax. Capital gains. I've listened to a lot of presentations. I joined those presentations. Sometimes I won't let people know that I'm there. By Big Four, by other people as well, discussing the reform, which is good. We're happy that people are interested in the reforms. But many of the analyses are not exactly correct. What we are planning to do as soon as we have the gazetted version of the law, we would meet with stakeholders like this. So thank you, PwC, for providing this platform. We'll meet also with the Big Four accounting firm because they speak to our top 80% taxpayers. What they say is important. Because actually, those investors trust them than they trust us. So getting them to fully understand why, not just what we have done, but why we have done those things is very important. I sat in one where one investor concluded and said, they are taxing capital 3 times more than before. The message is clear. They say we should not invest, period. Like I said, what kind of conclusion is that? Let me tell you what it is. We made, until these new laws, we made setting up a new business in Nigeria extremely hard from the fiscal side. We make running a business extremely expensive and burdensome, and we make it very easy to exit. That's counterintuitive. It doesn't even make sense. What we have done is to ensure that starting a business is easier, running a business is more profitable by reducing the burden, no minimum tax that you pay on your capital, your tax rate is less, the taxes are harmonized, you can claim input credits on assets, on services. You make more money, plenty of more money. You know what that means for the assets? Even if you want to exit, the valuation of that asset has gone up significantly because the asset is valued based on the cash flow it can generate, isn't it? If the cash flow it can generate has gone up, the value of the asset has gone up. Even if you pay 30% instead of 10%, you are still better off, even at exits. Plus, this is what the data shows us. Not many people are paying capital gains tax in Nigeria. There's a whole year that FRS collected 3 billion naira from capital gains, the whole country, for the whole year. This our reform has exempted individuals from all manners of capital gains. You have to sell more than 150 million shares in the capital market to even think about paying capital gains tax. And a few of people that will sell more than 150 million are here. Majority of Nigerians they haven't seen those kind of numbers before. You sell your house, you don't pay CGT. You sell up to 2 cars a year, no CGT. So what else are you selling that gives you capital gains tax? So individuals are fine. I don't know whether my brother from LRS is happy with us, but we've exempted individuals from all manner of capital gains tax. Then for companies, what is it that you are selling that gives you capital gains? There are not many as well. Maybe land and building. Because in our law reform, these new laws, if you sell your business as a going concern, no CGT at all. But should you take out individual assets and sell, right? Very few. So don't conclude that we are taxing capital because they call it capital gains tax. Maybe we should have put it a different name. It's chargeable gain that is called, not capital. It's not capital like the capital for investing. So bear in mind, and one other interesting thing is, under these new laws, you can now claim deduction for capital losses, including on virtual assets. Before, we will tax you on whatever gains you have realized at 10% and totally ignore all your capital losses. This time around, we say, aggregate everything. If the net is a positive, give us up to 30%. Once we reduce the rate to 25%, you give us 25%. Guess what? As a business person, this new regime reduces my risk because I can only pay tax on profit. The old regime could have made you pay tax on capital. Imagine you made losses of 10 billion and gains of 2. We ignore the 10 and tax you on 2. Under this new regime, your CGT is 0 because you have a net of 8 billion. So I thought that's important. Another one is top-up tax rates. We said, well, we don't want people to take our tax base and give it to another country. We need all the money we can get. We'd like to give you incentives as investors, but only to the extent that you can keep those incentives. If those incentives will be taken away from you by any other country, we want to keep those incentives first and foremost. So we introduced this top-up tax rate of 15%. If your effective tax rate is less than 15%, you give us a top-up. But there are loads of exemptions here and there that will not make it applicable to many companies. Non-resident taxation, from control foreign corporation rules to indirect transfer of shares to issues to do with digital economy, significant economic presence. All those, at the heart of those reforms, is what I just said now. Let us keep our tax base so we don't lose it to another one. And let us tax businesses fairly, whether they are on or offline. If you're selling stuff physically and you pay X amount of tax, why should you be exempted from the tax just because you do it online? We don't want you to pay more tax. We also don't want you to pay less tax than the person who is operating physically. There's a free zone tax regime. This is one of the hardest reforms for us to implement because people misinterpreted the law setting up the zones. They implemented it for so long, government kept quiet, and they assumed that was the rule. The rule was never that you set up in the free zone and sell to the custom territory without paying tax. In which part of the planet has that been a good policy before? We looked around, we couldn't find any other country where this is done. And then we read the language of the law, and we said, actually, it was never meant to be like that in Nigeria. The law in Nigeria says, if you operate within the zone, you will not pay tax. And then it says, if you export, you will not pay tax. If you bring your goods to the custom territory, that's the mainland, to compete with the other person who is paying almost 40%, you would outcompete them. If you allow you to continue, all the businesses in the custom territory would die in a few years, or they will be designated as free zone, by which time the whole of Nigeria would have been a free zone territory. We can just rename Nigeria to Dubai and see whether that works. So we need to create a level playing field. And finally is the tax intelligence. We've done a lot in the new tax laws to get intelligence because, see, people can hide their income, but they can't hide their spending. And that's because you don't buy from yourself. When you buy from someone else who has a different objectives in terms of what they want to do, right? So you don't want to report your income, but the other person wants to report their purchases because it helps them. If you buy an item or you import an item and you fail to pay the right amount of duties, it will be very expensive for you now. If you import this mobile phone and you under-declare because you don't like to pay import duties, when you report it for corporate tax, the asset will be disallowed. You can't claim capital allowances. If it's an expense, you cannot claim a deduction. Plus, you still have to pay the penalty and interest. We want you to do the calculation of tax evasion, and the answer will tell you that it makes economic sense to just comply. If we continue to live in a society where evasion is pervasive, and we allow that to continue, what we are doing is building an incentive system for bad behavior and punishing people who do the right thing. You cannot have a society you can be proud of if that continues. We've done a reset. Doing the right thing will be easier, it will be less expensive. Doing the wrong thing will be expensive, it will be costly, and it will not make sense. Let all of us do the right thing. So I see the tailwind because this is going to help us propel further and faster. Businesses will benefit, household and individuals will benefit, and government will benefit. In closing, what does this mean? We can build a prosperous Nigeria together. I can tell you from what I see that better days are ahead of us because the worst is behind us. And I've shown some of the data, I've shared that with you earlier on. We must stay the course. We're not complacent like this is the end of the road. No, we recognize that there's still a lot to do. For my committee, we had a retreat this weekend. And we're very clear that if we don't implement these reforms properly, it will be a waste of everybody's time. No law or policy is worth the paper on which it's written on unless it's properly implemented. So that we are committed to. And we are open to feedback and corrections. We will not be arrogant to think that we have all the knowledge. So please do share with us anytime you find those gaps. Seek to understand, very critical. Don't just work with, especially if you read headlines in newspapers, you just be going in the opposite direction of where we're going. Those media just write stuff for the clicks. That I have now concluded, given my experience over the past 2 years. You need to seek that understanding for yourself, you need to be well informed, and you need to put everything in context. And finally, please position yourself for the opportunity. You need to get on board because the flight is taking off, and you don't want to miss joining the train on time. Finally, Madiba said, and I quote, that's late Nelson Mandela, may your choices reflect your hopes, not your fears. Thank you very much for paying attention to me.
Thank you. Thank you very much, Taiwo. Very insightful session. I think what's clear is it's important that there's clarity so that we can all make informed decisions. The next agenda point is our panelist session. And to moderate that session is my colleague and our family business leader, Isiri Agbe.
Good morning, everyone, and welcome. Taiwo, very nice to see you again. Sometimes when I send emails, I say, Sir Taiwo, Oga Taiwo, I don't know what to call him again. It's still Taiwo. All right. So I'm going to call on the panelists that will join us on stage now, Mr. Ayodele Suber, the LIRS, Lagos State Internal Revenue Service Chairman, Executive Chairman. A warm round of applause and welcome, sir. I'd like to call on the chairperson of the Nigeria Economic Summit Group, Mr. Olaniyi Yusuf. Welcome, Niyi. And last but not least, our friend in the house, the MD and CEO of Adova PLC, Mr. Moshood Olajide. Welcome. Welcome, Moshood. All right. I've also got one person online, Will Morris, who's our global tax policy leader. I just want to be sure that he's still online, because at some point he's going to join us as well in the conversation. But Taiwo, great opening. Thank you for the thought-provoking presentation and identifying the fallacies. I hope PwC didn't go wrong in our own presentations, I trust. But nonetheless, this panel will discuss some of those key changes. And if we all recall, I don't know if everyone was here at the beginning, Sheun did start with an opening point of view from PwC as to how we see these changes evolving, affecting your legal holding structure, but also your processes, people, and function. And then it's also important to start looking at value chains as well. And I'm glad that Taiwo spent a bit of time talking about the changes in the free trade zone. So just to start, I wanted to just take a quick view perspective from Taiwo in terms of the strategic policy wins that have come through. Quite a number are here. But I wanted him to start with one, when the final version of the act is expected to come through, because we've been hearing it's likely to take effect from the 1st of January 2026 or not. Should we expect any changes outside of that? And finally, what are the big wins for you coming from all the hard work that you've done with the committee?
Thank you, Esiri. So the final versions, we started off thinking that the day the bills are signed into law, within 24 hours, we'll publish them. We're so very proud of ourselves with our plan. It didn't work like that. So it turns out that by the way, let me just say to you that the only official version of those reforms that is anywhere is the original bill submitted to the National Assembly. Anything else you've seen is not official, because the National Assembly did not publish the versions that they approved. So between asking the clerk to do the final editing, sending it to Ministry of Justice to review and advise Mr. President, and getting it to Mr. President's desk, there were a lot of editing, referencing, cross-referencing that we're not very comfortable with. So we said, well, it's better we take our time and do all this referencing properly and the editing as well. That, unfortunately, has taken a lot of time. It's not within the control of my committee. Otherwise, we can always work 24 hours a day to get things done faster. So the latest information I have is that the gazetting is currently ongoing. They do the gazetting in Lagos because that's where the physical printer is. And I was told they have to come and print physically. So they are printing as we speak. How quickly they'll finish printing, I don't know. They said they have not printed anything of that volume for some of them in their entire career. So we'll allow them print, and as soon as we get the printed versions, the same day you find it online. That we promise you. In the meantime, whatever you are discussing, just remind yourself that it may not be the final version that you are discussing. But I don't think what will change will be more than 5% of what is in the public space. So that is the bit I can tell you about the final version. What's the gain or benefit?
Yeah, big wins. Maybe two.
Big wins. Yeah. I said to someone, I said the legacy I'm hoping that myself and my committee will leave behind is to look back in a couple of years and say that some Nigerians came together, they were given the opportunity and did their best to help their country, in the sense that we'll see Nigeria becoming more competitive, both regionally and globally, especially for businesses. We want to see more decent jobs. We want to see the fiscal policy complementing monetary policy to make sure Nigeria is more stable and we can plan long term, and also to see government that is more responsible in terms of what monies they earn and how those monies are being spent. So those are the things our reforms cover. Harmonization is a big one. We want to see when you take your produce from the north and you drive to the south and nobody stops you. If you look at the inflation rates, you will see the rural inflation and the urban inflation, especially on food. the difference is almost 500 basis points, like 5%. All over the world, the difference between rural inflation for food and urban inflation food is transportation costs. What we've done in Nigeria is added so many things to it. We've added multiplicity of taxes to it, and we've added bad infrastructure to it. Truckers who bring yam from the north to the south said they have a budget of 700,000 naira per trip. So yam gets to Lagos, and the poor person cannot afford it. By the way, do you know that the most vulnerable citizens are not the poor people in the villages, they are the urban poor. So that needs to be fixed. So those are the biggest wins for me. But like I said, if you are homeless and you want to build a house and you've done a solid foundation, you are still homeless, even though you have made progress, isn't it? We have the foundation, we need to build a solid house.
Thank you, Taiwo. Taiwo can sell anything to anyone. Don't smile too much. Oh. Let me call Moshood so that Moshood can give us the sectoral impact. I don't want to be carried away as well by what Taiwo is saying, but very well answered, Taiwo. Thank you. Moshood, I think the downstream sector has been hit with back-to-back reforms, even with the removal of the subsidy as well. And now there's this big tax reform. I wanted to get your thoughts or views on how you're seeing the reform coming and what could be the big transition issues for the industry. And you may very well speak to any other industry that works hand in hand with yours.
Thank you very much, Esiri, and thank you very much for having me. I think, for me, a couple of things. One is the minimum tax. I think minimum tax has always been a problem in the downstream. I think almost every business in the downstream would have ended up paying minimum tax at one point or the other in the last 5 years, maybe 4 out of the 5 years or even the entire 5 years. So I think the minimum tax provisions, very impactful in the industry. I think generally, my read of the bills, and maybe I'm happy to be corrected by Taiwo that some of the things we're seeing are not necessarily what would end up in the final version of the bill. But I think some of the things I've seen suggest to me that it will probably be more expensive to be non-compliant. So it probably will be cheaper to be compliant. And for me, why that's important is it incentivizes doing the right thing and create a level playing field for businesses, right? So if you imagine a business that is listed, that has institutional investors, you're always worried about not doing the right thing, whereas you end up not being competitive because the system before now would encourage those things that would make other players more competitive than you, which are not necessarily legal. So making non-compliance expensive, for me, is a big win for businesses. I think the provision around removing discretion for tax officials and making sure that the tax provisions are clear, they remove room for debate on meanings of provisions. I think they become very, very important to us. So you can plan your businesses knowing exactly how the tax provisions will be interpreted, not that you would have done what you thought was right, and then you end up sitting down with a tax official to start begging for discretional allowances, as it were. So for me, those are the big things I'll take away from the bill. One of the things, now that I have Taiwo on stage, I've begged him privately, I want to beg him publicly. The harmonization with the state authorities become very, very critical. They would have very significant implications if we could do them. In Nigeria, there are no pipelines for refined products. Well, there are no functional pipelines for refined products. So we take products to the length and breadth of the country using trucks, right? So we can tell you that the taxes are 700,000 is just the beginning, right? So harmonizing those taxes will significantly improve the ease of doing businesses across the country. I think the painful part is some of those things that is called taxes are actually not taxes. There are area boys stopping trucks and just collecting money for their pockets. The money don't end up going to any state coffers. And you really, really can't beat them. They call them what they call stickers, right? No matter the number of stickers you have in your truck, they will have one that you don't have. right? And it's very ridiculous. Some of our trucks have 72 stickers, right? And when they still stop them, they will still find one that is not included in the sticker. So harmonizing the taxes, letting all of us know what exactly is the taxes to be paid in a very transparent way and in a very easy way to do it will make it easy. And harmonizing would also help. So for example, we have retail outlets across the country. I have tax clearance certificate from LIRS, I have from Ogun State, because they will not process our transactions until we show them evidence that we pay tax in their state. Even if you tell them that you're resident in Lagos, they say you need to have 2 directors that have 2 tax clearance in Kano. I've not been to Kano in the last 2 years. It doesn't matter. Do you want this thing to be done or not? So you would pay again, and they'll give you tax. So I can show you tax clearance certificates from 6, 7 states across the country, places that I don't reside, and taxes that are just completely discretionary, right? So harmonizing these things will significantly improve the ease of doing business generally.
This is the point where we say, drop the mic. But I'm sure the audience will say, hold the mic off. And it's a good way to bring in the LIRS chairman, honestly. So this is the biggest internal revenue service we have in Nigeria. So they are primed for this question. It's really, what are you doing to get prepared to plug into this? What technology readiness do you have? And in terms of taxpayer management as well, what's the assurance you're giving this audience?
Thank you, Siri. There's no doubt about it. Lagos is very strategically placed. Over time, clearly, the state has invested heavily in digital infrastructure. And this is when we start to see more gains. We've seen gains over the time, of course. And with the tax reform policy, we can see even more gains. Lagos was one of the early partners of the presidential committee because we saw a lot of future in what they were doing. So in terms of digital technology, everybody here, I'm sure, will be familiar with the e-tax platform. So that's an end-to-end tax administration solution, right from registration up to issuance of tax clearance certificates. That's already in place. We're doing a lot of, carrying out a lot of other processes to make sure that before January 1, we are fully in tune and fully aligned. For instance, we expect a great influx of data to come in arising from the tax reforms. A lot of financial institutions, for instance, have to give us a lot of information about all you guys in this room. So we're very, very excited about that. I don't have to chase most of you. For all those in employment, all you do is file your employment income. We don't know all the other types of businesses that you're doing. But with the tax reforms coming, there's going to be a lot more visibility. And also in terms of taxpayers, we're constantly and also now designing all sorts of programs and projects that will allow us, educate taxpayers a lot more. It pays, like Taiwo said, it pays to comply. So, there's a lot that is going to happen between now and January just to make sure that the level of transparency and accountability is really driven up. And ultimately, it's not just about revenue, really. The larger picture is the development of a nation.
Thank you so much, Mr. Subir. And I think I like the point you made on technology. And at this point, I'd like to welcome the chairman of the NESG, who wears many hats, by the way. He's had a lot of experience on IT governance and leadership, as well as InterSwitch projects that you've worked on. One of the big changes is around e-invoicing, yeah? And Shehu had earlier talked about how processes need to change to accommodate that. Could you just kind of give us some insights on how you're seeing this play out, whether Nigerian businesses are ready, or whether in this next 6 months there's some quick wins that can be had to get us ready.
All right, thanks, Isuri. So our Nigerian business is ready. I think we are, WIP, we are a work in process, but I dare say we will ultimately be ready. And you can look at this in a few dimensions. So if you apply the 80-20 rule, our large taxpayers, the top 20%, they typically will be ready. They are multinationals, they have systems, they have technology guys, they have consultants supporting them, they have ERP systems, so there'll be some integration that'll be done. And these are, like Moshood said, companies that would like to be in compliance. So they will be ready. Then you come down to the medium and then the SMEs. Those I worry about, but even for those, I'm also hopeful. 10, 12 years ago, we had less than 20,000 POS machines in this country. Pre-COVID, we had less than 500,000 POS machines, right? Post-COVID, today, we have more than 2 million POS machines. So that shows the entrepreneurial, innovative spirit of the Nigerian businesses. Today, you have companies like Flutterwave, etc., Paystack, that have created payment gateways that allow SMEs to, at a click, be able to offer payment services. I expect we'll begin to see those type of companies also then playing this e-invoicing, e-tax regime. So that once you have a payment gateway, it automatically, well, not automatically, but ideally, it could serve as a tax or e-invoicing gateway or some services. That will help. But Nigeria is a country of many dimensions. Lagos is different from Oyo State. Even in Lagos, via Ikoyi Lekki is different from Agege. Not talk about the north. And so the urban areas will be different, the rural areas will be different. There are areas where technology is available, there are areas where electricity is available. If you do an overlap of electricity supply and internet connectivity across the country, those same areas will also be areas where you have high level of financial exclusion and where you also have high level of poverty. And so we do need to do some work around the basic infrastructure, electricity supply, internet connectivity, that would then allow other businesses to be able to then connect. But I'm hopeful. I think what we've seen in payment, we also will see it happening sooner than later in terms of e-invoicing and e-tax.
Thank you very much. Very well said. And I'm not going to hold the mic. I'm going to, at some point, have the audience ask some questions. But before we do that, I'd like to invite the global tax policy leader for PwC Online, Will Morris, just so he can share some thoughts on global lessons learned. Is Will online? And while he gets ready, maybe we can quickly have the executive chairman of the FCT Internal Revenue Service, Mr. Michael Angle, share a few words. Yeah? Michael, how do you see this coming through for you?
Do I stand? All right. Good morning, everyone. Thank you, PwC, for inviting me and giving me the opportunity to speak. When Taiwo was up on the stage and he was talking, I had to go back to a little bit of my Bible knowledge. For those of us who are Christians, remember that they said the first miracle that Jesus performed was turning water into wine. And when he did it and they brought the wine to the MC said, you people left the good wine until the end of the show. So I think PwC learned from that and they brought the good wine at the very beginning of the show. So, Taiwo, thank you for coming to speak here. I was a part of the presidential committee, and I must say that as someone who has been in public service for some time, I worked previously at the FIRS before I went back to consulting and then back to public sector. This is indeed the most rigorous, the most detailed, and the most inclusive tax reforms that I think we've ever held in Nigeria. And I think for that, we should applaud, all the persons that were part of this process. In terms of the output and the final versions of the bills, I want to say that as much as we will not get everything that we expect to get, the most important thing is that we have something to work with. And what I've learned in my little life in public sector is that you don't always get what you want, but you can work with what you get. And so, Taiwo, while you're waiting for the final versions of the bill, I also want to tell you that you may not exactly see everything that you wanted to see in those bills, because a lot of strange things happen in government. But anyway, for us as the that's off the record anyway. For us as the internal revenue, and of course, my elder brother and the person we popularly refer to as the universe chair, the longest serving chief executive of the Internal Revenue Service at national level. We're actually excited about these reform bills. Of course, we have a bit of apprehension because our bread and butter, of course, is the payee, where we are able to easily chase employees, and then we can disturb the likes of PwC to ensure that their clients file their payee. And then by the time we begin to chase those people that Taiwo has increased their tax rate, those ones, they have the wherewithal to engage PwC again, to then say, look, no, this money is not here, this one is this. I mean, I had a HNI who actually did write back to me and said that he was resident in another tax jurisdiction. And when I wrote to that tax jurisdiction, the tax jurisdiction said, look, this man is our big daddy, so leave him alone. But we will do the hard work. What I want to encourage everyone is to say that, look, let us all be involved in the process. This is something that I think ultimately will be for the best or for the betterment of the country. I think that what we've seen is we've seen political will in terms of getting these bills up to this moment. And I think we'll also see political will in implementation. And I'm excited to know that there's already an implementation committee working. And what I want to encourage the committee to do is to, as much as possible, involve all the key stakeholders. Because at the end of the day, law is law, but we still need human beings to implement those laws, and we also need human beings to comply with those laws. So I want to commend PwC for this session. I think you guys have gone ahead of all your peers. I hope the others too will have similar sessions like this. Some of us are still a bit conflicted, but we'll leave that. So I want to congratulate you. This is a very fantastic event you put in. I came in on the first flight from Abuja, and I said I had to be here to honor you, and I want to thank you for also inviting me and for giving me the opportunity to speak. Thank you.
Thank you so much, Mr. Michael Angle. Well said. The real test lies in the implementation. The devil is in the detail. And I would just like to find out if Will Morris is online now, so he can just give us a glimpse of that Tesla truck that Taiwo showed earlier, and what the road to prosperity might look like in terms of key areas that we need to pay attention to. Will?
Thank you for inviting me to this. Taiwo, first, congratulations. What an amazing piece of work. When we talked about this in the Quran last year, I had no doubt as to your ability, but given my team touch all around the world, I didn't think anybody would be able to make it possible. And what you've done is quite remarkable. As to that question, Siri, about Tesla, as you'll know, in the US, Tesla is having some problems. So, in terms of what Nigeria has done and how it goes forward, I think there are some important lessons which can be learned from tax reform that certainly I've seen in the almost 4 decades that I've been doing this. And I'll just give them to you very quickly, and the last speaker actually touched on two. But the first is, as you come to implement the law, keep the regulations as simple as you can. There is no doubt that you can have the best tax reform in the world, and you can ruin it with complex implementation regulations that tax administrators can't administrate, and the taxpayers can't comply. So that really is the number one rule. The number two rule, again, as the last speaker said, is include all the stakeholders in that regulation process, particularly businesses. It's not about letting businesses write the regulations, it is about working with businesses to understand what the way of business is, what rules will work with the way that business works, and be more effective in implementing the law, and what won't. Consult about that. There are many rules are not consolidated with business reporting introduced, and that is policy elements of this separate from the revenue function. That might be a formal split between Ministry of Finance and now the National Revenue Service, and maybe other ways of doing it. Again, mixing up policy and revenue raising in the end tends to mean the focus gets on revenue raising rather than on enforcement of policy. Another really important point is invest in the tax authority. Invest in the tax authority as much as you can. Get good people, pay them well, train them well, and keep all your auditing. Because it is only the tax authority that can make this work well. Again, you can have enthusiastic compliance for businesses, we hope. But if the tax authority can't meet that, then once again, however good the law is, it's going to fall down on the administration. So invest in the tax administration. Another point, again, this doesn't always work. As you can, both in relation to legislation and regulation, make as hard as you can to prevent the tax system from becoming recomplicated. There will be lots of people with lots of special feelings, lots of special interests. And again, very simple reforms to work, which are going to have an effect. We get an effect. There are examples of that in Europe. Slovakia, for example, had a flat tax. They're slowly going to pull back on that. That again diminishes substantial benefits. It can be good individual reasons each time for making one small change. But a series of small changes will recomplicate the tax law and will undo the benefits of tax reform. And then finally, again, Taiwo talked about this again. Taiwo, thank you so much for actually focusing on this. When you come to think about writing, thinking about tax reform, and writing regulations, and then sort of keeping them up to date, keep the focus on economic growth. Yes, the purpose of tax regulations, one level, is to help raise revenue, and raising revenue to help fund the state to get you above that, sort of the threshold where the state becomes self-sustaining up to 17–18%. That is very important. But you will get there quicker and better and more sustainably by encouraging economic growth. And that means encouraging businesses to grow, encouraging businesses to provide better. So keep economic growth as the central focus when you're doing that. And that again will help make tax reform successful. And again, it's a lesson which has to be learned again and again. But I feel more confident with Taiwo and the board of other folks who are up in the state right now who are just in Chijuk, that will be possible next year. So again, congratulations. This is the beginning of the process. This is not the time to rest. But equally, what an amazing start. And I look forward to continuing to see how this goes. Thank you very much.
Thank you so much, Will. Will really wanted to be here but couldn't, and he actually didn't sleep. So it's about 5:44 a.m. where he is right now. Thank you for staying awake and discounting sleep. Yeah? So on that note, I'd like to just open the floor now for some questions from the House. One of the things Will talked about is just that continued conversation with businesses, understanding the businesses in terms of how it works from an implementation standpoint is critical. So I'd like to take a few questions before we close the panel conversation. Shadra, yeah? And then, sorry, I can't really see, but we'll have the mics just passed around, yeah.
Hey, very good morning, everyone. Thanks to actually PwC for the amazing platform, very insightful discussion. Though Mr. Taiwo covered it a bit, my question is more in terms of the free trade zone. In most of the countries across the world, they use free trade zone more as a tool to be more targeted to spur economic activities, either in terms of industries, in terms of particular region which requires development, or in terms of driving exports. One, as part of the three questions I have, the first one is, in your experience, do you see for Nigeria the free trade zone as a tool? Has it worked or not? My second question as part of it is whenever the benefits are taken away, there are two approaches. Many times they are taken away in a phased approach versus where currently we are saying within the Nigeria it's a hard stop. So one, what's the thinking behind making it a hard stop versus taking a phased approach? And the third is there anything on the cards where you want to replace or be more targeted towards driving growth and activities either in industries or backward region? Is there anything which will replace the free trade zone sort of objective? Thank you.
Thank you, Shashaji. Taiwo?
Thank you very much. Great questions. On the first one, so we actually looked at many territories around the world, including in Africa, Ghana, even Benin Republic, before we made the conclusions we made. We remain convinced that we need to make the free zone competitive and to attract investment without undermining the businesses in the custom territory. So that's a key principle for us. Now, in terms of how that is implemented, we have retained all exports from the free zone will permanently be tax-free. That's not even the case in Ghana or Benin Republic. Any and all activities within the zone will continue to be tax-free. But if you're in the zone and you sell into the custom territory, we will look at the activity that you're performing. If that activity falls under our priority sector, or any sector for that matter that is important to the economy, almost all the sectors are, you may be granted a tax-free period for up to 10 years. So for that 10 years, you don't pay corporate tax, even though you are selling to the custom territory. Why did we introduce that? It's because the person in the custom territory can also get that 10 years under a priority sector incentive. So the level playing field is leveled, or the playing field is leveled. So we think, and we're working on it now, we think that the laws setting up the free zone, we need to repeal them entirely and reenact new ones under special economic zones legal status. Because the free zone is not telling the whole story. For example, we had some engagement a couple of days ago, and the guys who have unicorns in Nigeria are mostly headquartered in Silicon Valley, and they're Nigerian companies. And we want them to move their businesses back to Nigeria, headquarter here in Nigeria, because we've done the law now to be attractive, bring the executive to be in Nigeria, so they spend here, and then you have more purchasing capacity. And one of the feedback that came out very clearly is that even with the reform, Nigeria is still not the most competitive for attracting capital in that form. So how can I allow you bring your capital into Nigeria and have the same advantage as if you left it in the US, for example, or somewhere like Delaware, or whether in Dubai. Dubai is a stretch, but we should try. So those things, the work is currently ongoing. So when we are done, you find the free zone will be very competitive, will be attractive, but it will not undermine the domestic market. So the first approach for us wasn't going to work, although we tried to do something small like that. So you find in the law, the final version, it to say to you that whatever you are doing now, you can continue to do until 2028. So this is like just giving you a free pass for another 2 to 3 years. So 2 to 3 years is enough for you to move things around, whether you want to do a new structure, whether you want to register within the domestic market. So that's the bit we're able to give. Replacement, the economic priority sector incentive is the replacement that we were able to find for the free zone in terms of activities within the custom territory. Thank you.
Thank you so much, Taiwo. We don't have much time left anymore. One more question?
Yes, okay.
According to my tax leader.
Can I go on? Okay,
Yeah.
Good morning, everyone, and to say thank you to Pricewaterhouse for extending this platform. It's good to be home, I should say. And thanks, Taiwo, and the panelists as well. I'll start off first with a comment, and then another question. I mean, my concern had always been around implementation. And Taiwo, I really would like to leave here with a little bit more assurance, because we know prior to the signing on June 26, some things had to be left out, and we understand that. But now I'm leaving also with the possibility that the final bill that would be drafted might still be different. So to what extent are you going to, your committee would still be working almost like in a handshake as we move to the final bill? Is there some assurance we can get from that? Then part of the harmonization, I believe the single window is going to play a critical role. How will that process, because we've not yet gotten to that, the final outcome of the single window. So what thoughts can you give around that process? Thank you.
Thank you. Again, great questions. Thanks for asking. So for the implementation, one thing that Mr. President did differently, and I think Nigeria should adopt this model going forward, it's the first time to my knowledge that Nigeria set up a committee with the mandate to implement. So our committee, our job is not done. In fact, we feel like we've just started the phase 2 of our work, which is just as important. So like I said, we had our retreat over the weekend. So we have work stream now, and the only reason why we've really not published a lot of what we're doing is just waiting for the gazetted copies. So you see a lot. We have been very intentional with this implementation, and I can assure you, myself and the rest of my team, we're not going anywhere. We're going to be there to implement. We've said to ourselves that people can appreciate what we're doing, but we think they should wait until we have implemented and we have seen the impact and the outcome. So we're that intentional in terms of the approach. Single window, yeah, this is something we should have done many years ago. It didn't work because even in the past administration, I was one of the people advising the minister. We made all efforts. Something as simple as appointing a lead agency for single window was rocket science. Nobody was bold enough to sign it. They were afraid of conflicts. And one of the comments I made when I had my birthday public lecture about the signing tomorrow is that I've seen firsthand that there are people who use government resources to fight government. And they actually get away with it like this is a joke, or it has to be. So, but the single window has started. You see that the FRS is the lead agency to become NRS, and the work is progressing well. Very soon you'll see that will bring a lot of relief. International trade will be seamless. We have some harmonization, and overall it's going to be good for the economy. So fingers crossed, but we're doing the hard work behind the scene.
All right, so we're just going to close now. Final thoughts, 30 seconds, please, from each of the panelists, starting with Moshood. No.
Thank you. I think the implementation for me will be what I'll talk about. I think Nigeria has never been a country that lacked the ability to have people think of creative stuff. It is how we are able to implement those creative stuff that really, really matter. I think the way the committee has started suggests that they're credible people and hardworking people. So leaving the implementation in their hands gives me a lot of comfort. So I'm hoping and wishing the committee very well that they're able to implement at least this part of it, and then they're able to do the other things that we need to do. So for me, implementation will be what I will talk about. I'm hoping that it's successful, and I'm praying seriously that it's successful.
Thank you. Amen. All right, so two things. First is for non-government actors, businesses to, like Sam said, this is an opportunity. Let's embrace the opportunity. And then second is for the government, Taiwo and his team. We need to complete the third pillar, which is the harmonization with the states, with the subnationals, the capital budgeting and spending plan, all of those items that will ensure that the gains from the new tax reforms are really then wisely spent. But hopefully we'll drive beyond the Cybertruck.
Okay, my final thoughts would just be to sort of reiterate that we need to stop seeing taxation as a moral burden. We need to start to look at it as one of the major steps towards true development, because at the moment, people just want to dash government something. They don't look at it that we are operating based on a set of laws, set of rules, and transparency and accountability has to be, the order of the day. Well, I also would be first to agree that it works both ways, because there's a bit of mistrust between the government and the governed. But at the moment, there's a lot of emphasis on changing that mindset from both angles. And the tax reform is doing a lot in terms of, guiding the fiscal framework for the country. So with a good mindset from both the government and the people, a lot of developmental changes will be achieved.
Thank you so much, Mr. Zubair. And the man of the moment.
Yes, I think my closing thoughts would be we have a very fantastic piece of legislation. These reforms are good. I've been on all sides of business, small, large, advising, and all of that, even across, with international experience across Africa and the rest of the world. By the way, African Union has called us to try and do something like this for Africa. This is remarkable. We've seen a lot of interest from the international community. From the rating agencies, we spend enormous amount of time with the rating agencies. So these are our upgrading of ratings, part of these reforms. So the world is excited about what we're doing. We have to be excited ourselves, because the narratives that we project will drive the behaviors, and the behaviors will drive our reality. They are good reforms. Let's project them as such. The stories we tell ourselves are important. That's not to say if you find anything that it's not working there or that doesn't make sense, by all means, please do flag it. We'll be more than happy to engage with you. And if it's something we can fix, which is almost everything, we will fix them. That commitment I can give you. Thank you very much, everyone.
Thank you so much, Taiwo. One round of applause. And that marks the end of the panel discussion. Thank you, gentlemen. Do we want to take one picture? After? All right. So thank you. Thank you. Thank you, Mr. Zubair. Yeah.
Okay, looks like the photos will happen. Sam, Chijuk, please, can we have you on stage?
And the FCT IRS chairman. Thank you very much. Thank you, sir. Yeah. Thank you for sharing.
Thank you to all the panelists. Very thought-provoking conversation. And I think we've had a lot of deliberations today, but I think what's key is how we translate insights into outcomes. And to help do that, I will welcome on stage 3 of our tax partners, Timothy Siloma, Kenneth Erikume, and Chijuk Wabute.
Okay. So we still have a lot to cover. So please don't be in a hurry because this is really, we're getting to the really good part of this. So I think we've talked a lot about the reforms, what it means for us, the implications, great conversations by the panelists and, absolutely amazing questions that were asked as well. But for me, when I started, what I talked about was I need this to be as practical as possible. So we've talked about the laws and everything, but how do we then implement and what does it mean for you, really? How do we start driving this transformation? So that's why I just decided to bring up my partner colleagues here to just have a very quick conversation with you on what this transformation means and what future readiness means for you. And perhaps I'll start with we call him my expatriate partner, he's Kenyan, Tim Siloma, right? So I'll start with our expatriate partner. Tim, a lot of conversations have been going around technology, right? And how technology is going to drive a lot, higher compliance, ease of doing business, ease of tax administration. So I know they talked about the e-invoicing. So can you tell us a little bit about this e-invoicing and how you're looking to support our clients with it?
Thank you very much, Chijuk. But perhaps for me, I'd like to just delve a bit back, right? And what is the transformation journey for most of the revenue authorities? Everyone here in the room, including the tax partners, when we really started our careers, it was really much paper-based filing. And of that, within the last 10 years, what we have seen is actually moving into the e-filing, right? But that journey has not really stopped, right? There are 2 other steps that are going on, right? The first step is the revenue authorities are asking for data and transactions as they happen. Mr. Zubair was here and saying that, wait a minute, he's gearing himself ready to receive a lot of more data, right? So that data is happening real time. The next journey of this is actually what I can call real-time audits, right? Okay. So ultimately, the revenue authority will be able to audit you from a real-time perspective. So with millions of transactions, going back to your question on the invoicing, millions of transactions are being processed on a daily basis, right? Companies are going to generate transactions, but those transactions have to be transmitted to the revenue authority in a real-time manner. So there's no room for error. There is no room for guesswork, right? So the questions for businesses is, how do I move from where I am to where I want to be, right? The journey requires a multidisciplinary approach. Why do I say multidisciplinary approach? You need somebody that understands business processes, you need somebody that understands the tax rules, and you need somebody that understands the technology, right? And the truth is, we have you covered, right? And perhaps I have a small video on how we can help you walk through the journey of e-invoicing. So we got you covered as our clients, as businesses. Yes. Thank you very much.
Impressive. Thank you. Thank you. Can we put our hands together for Tim? Thank you very much. But, you know, from our conversations, we've said e-invoicing really, there's a huge VAT component, right? But Taiwo talked about withholding tax, reduced withholding tax rates, you know, changes in compliance requirements. So tell me a little bit more about what you are doing in that space as well.
Thank you very much, Chijuk. Taiwo said something when he was here. He said that he wants to make sure that businesses have working capital, right? Withholding tax has really been a pain for most businesses, right? You end up in situations where the government collects, and government actually is very great at collecting, but they are not great at refunding, right? So a lot of your working capital is tied up, right? But then one of the things that Taiwo said was, yes, the tax rates have reduced, right? But the other thing is the penalties has increased. So the risk of non-compliance is significant, right? Number two, if you look at the withholding tax regulations that were recently published in January, you'll actually realize that the compliance obligation as a company has significantly increased, right? So based on this challenge, our clients came to us and asked, Tim, really, well, on the other hand, I'm getting a benefit in the withholding tax reduction, fine, but also on the other hand, my compliance obligations have increased and my risk has increased. So together with my tech team, I asked, what can we do for businesses, right? And we came up with we went through the thought process and we came up with Navigate Withholding Tax Manager. So our Navigate Withholding Tax Manager is our response to ensuring that you as businesses are able to do your business, you're able to ensure that your withholding tax benefits are managed, and also retain that by ensuring that you no longer have to face the risks of non-compliance. Just to walk you through, I have a short video on what the Withholding Tax Manager does, right? And
Okay, so now I know where all that tech budget you've been asking me for. You know, now I know where it's going to. But I'm not increasing your budget, by the way. I'm not increasing your budget. But hey, thank you, Tim, on the Withholding Tax Manager. I think pretty great stuff. But now when I think about it, so we talked about technology, but we need to kind of bring it together to say, what is your transformation journey and how do we walk that journey with you? How do we navigate that journey? And Ken, you know, I know you've been thinking about tax transformation, you know, looking to optimize systems, processes, and even integrating technology into it. So do you want to tell us a little bit about what our clients would be able to, you know, what kind of support you'd be able to provide to our clients around that transformation journey?
Thanks, Chijuk. Very interesting question. I'm sure everyone sitting here, when we started, we spoke about 400 pages of legislation. What every executive sitting here will be wondering is, how do I navigate through that legislation? And how do I deal with things that impact on my corporate structure, my business operations, and so on? Because you're paid the big bucks, some of this will come intuitively. So for example, there was someone who called me in the microfinance space to say, let's update our logic for servicing our clients because of these new reforms. And if I look at, some public event that has happened recently, the sale of the FBN shares, that could have been done next year, or it could have been done this year. But the timing is important because if you did it next year, the tax on it would be 30% as compared to 10%. So there's a lot of strategic thinking that needs to come through in terms of my corporate structure, investing into other jurisdictions outside Nigeria, and even, attracting and driving the investment into my business, as well as my business model. How do I optimize? Make no mistake, this comes with a lot of disruption. And the people who are forward-thinking would probably unlock opportunity faster than others. So it's a lot to take in. And the only way to deal with it is to say, what are the questions I should be asking myself around all these areas? And the only way to do that is to make it a bit more crisp, a bit more clear, by using technology as well to ask yourself certain questions. And we also have a diagnostic tool that helps you to think through, what should I be doing? And it does that comparing you with the North Star, where I should be as a company, versus where are my peers? Because when other people go through that process, you can then benchmark and say, in my sector, in banking, this is where I am and this is where my peers are. So I think this tool would help at least to get you thinking about the opportunities, the risks, and the efficiencies I can unlock from this process. So just final word on this, it's free, so I just...
As far... hold on. You can't spend all the money you spent on this and tell me it's free. Sam, I hope you're hearing your partners.
Absolutely free of charge.
Okay.
And then we can have a conversation.
Absolutely. So let me caveat it. Yes. Because as far as smiling a bit too much. The diagnostic is free, right? So it's a free diagnostic, right? Then it allows us to have a deeper conversation. So free diagnostic, and absolutely you could decide to walk away after the diagnostic. That's our contribution, because really, if you think about our purpose as well. So look, we continue to solve important problems. So we will, and there's an opportunity for this. There's a QR code that will be put up. I don't know if that QR code it'll be put up at some point where you can indicate if you'd like to participate in this. We'll have the QR code up throughout, but now we've talked about this. I think I saved the best for the last, right? A Siri. So, I was very particular about, people and being able to drive knowledge, right? Being able to ensure that you break through the complexities of the tax laws, right? The new tax law as it's coming through. So I know you've been doing a lot, to kind of see how you can, first of all, drive the publication of, an Insight series. I know you've had the webinars that you drove throughout last week. Tell us a little bit more about this people journey, this knowledge journey, because it's extremely important that we don't lose sight of that and what you're doing in that space as well.
Yeah, thanks, Chijuk. And I think maybe I'll touch on Sheun's presentations earlier. This is going to be a boardroom conversation. It's not just about the tax personnel trying to save costs, but it's around optimizing value. Two, which is critical, is getting everyone ready on that journey. Because if you'd looked at the value chain, you'd see there are different touch points across your operating structure, your holding structure, even the energy model and business model of companies will be impacted. And there are savings to be had, but also challenges that could quickly evade value that you've recognized in time if you don't act fast about it. So what we've done, we've had the webinar series, and you can look those up online on our YouTube page. It's also going to be hosted on our website. Two, we're having our upskilling session starting after this session from the 23rd. We're going to quickly accelerate through general sessions and deep dive sessions where, for instance, we can focus on the free trade zone and what it means for you, but also looking at even virtual assets and what it entails in terms of capturing losses that should be deductible. And there's much more. So general and deep dive sessions happening July and August in Lagos is also hybrid, so you can join online. The one which is the best part that I love is happening in November. This is where I get to spend their money. And I'm traveling to Kenya with a group of people who are interested executives for this session. Why Kenya? One of the reasons we thought that would be good is Kenya has some years ahead of us in terms of e-invoicing. So there's a big collaboration with our team there, with the Belgium team and the Indian team to get executives ready and started. It's also focusing definitely on strategic areas, and so it will be very important that you come with us and drink that chai tea in Kenya and be part of that training session. I look forward to seeing some of you there or all of you seated in this room. Thank you very much.
Thank you. And I think you did talk about also the Insight series.
Yes.
So.
And we also do have our Insight series launched today. Drum roll. The Insight series are very sector specific. We have a general section that gives you a general overview of everything you should know across industries. And then we have specific sections for each sector. So you can go there and find out those specific things that you'd like to know. So you can scan and download the Insight series. We had also another one set up for questions. I didn't take a lot of questions during the session because we were pressed for time, but please try and also put your questions up there so that with time we can bring out an FAQ that's very well thought through and can engage every single person in your organization. All right?
Yeah. Thank you, Esiri. Please, let's put our hands together for Esiri. You see, Esiri has a way of milking these foreign trainings. Last year, was it last year or this year? Last year, you took a group of executives to Rwanda, Abi. You took them to Rwanda. This year, you want to take them to Kenya. I hope I get to go.
Yes.
I hope I get to go.
Of course, that comes without saying.
I hope I can train too. I'd like to be trained as well. So I think, and we will, if we all consent, we will also send you these Insight series by email as well, or the links to the Insight series by email. So even if you don't get to, download it through the QR code, you still have an opportunity to just send your questions across, because we will take our time to respond to your questions, and we will have a repository of all the answers to the best of our abilities. But I'd say this, this Insight series, a lot of people have been asking us, when are we going to come out with our Insight series? Because it's really the thought leader when it comes to these tax reforms. We've done a lot of deep dives. It's very practical. In fact, one of my directors was telling me that how are we going to make money if you've given all the opinion in the Insight series? That there's nothing else, there's no more money to make. But I believe that, look, let's share the knowledge. Let's really empower people to understand these new tax laws and do it in a way that's easy to read. It's written in a very easy way to read and understand. So I'll thank you all for your time, and I will hand back to Taiwo. And please, we also have, I'm sorry, just one more thing. We also have a free tax clinic out there. So I have some directors who are willing to answer your questions. If you have any questions, if you also like to register and ask us to come and speak to you, we are happy to come and engage with you directly as well. Thank you very much. Taiwo.
Thank you. Okay. Thank you all. Again, I'll hand over to Kenneth for the closing remarks.
Okay, I think I know people are standing up and it's difficult to hold people together. I think one information I need to pass across is that we've served lunch. So lunch is served. Immediately after this session, you just go out and have lunch. I want to thank, in absentia, the chairman of the Presidential Committee for Fiscal Reforms and Tax Policy. He's still here. Thank you so much, Taiwo, for giving us this time. I also want to thank the executive chairman of the Lagos State Internal Revenue Service, the executive chairman of the Federal Capital Territory Internal Revenue Service. I also want to thank Mr. Niyi Yusuf and Mr. Moshood Olajide for giving us their time. And I also want to thank all the executives for giving us the time for this very insightful session. Thank you very much, everyone. Have a good afternoon. And lunch is served. Lunch is served.